Good morning. Thank you for watching Taxes Made Easy. So just following up, we've got a lot of news to cover today. Trump made another big announcement about taxes. I'm not sure what kind of impact that will happen for everyday people, but for blue collar workers, it is a big bonus. And so we've got some good information to go through, a lot of good information. We're going to focus on audits. What is happening with the IRS and how do you protect yourself from audits? So we'll be right back after this break. Welcome back, everybody. Thank you for watching Taxes Made Easy. And we're going to kind of dive right into the news today. Some interesting, kind of fun news. First article is from Fox Business, but this is really about a billionaire who pays hundreds of millions of dollars to go into outer space and be part of a space exploration. Now, this is all SpaceX, a company controlled by Elon Musk. But some of the stuff they're doing is pretty amazing. So while they're doing these kinds of things, Boeing's spacecraft, and we have astronauts stranded at the International Space Station. They were supposed to be there a week. Now they're going to be there until February. And who's going to save them is the SpaceX shuttle. So here they went out to space. Interesting here, you can see these new suits that are very different than what we're used to, the old clunky spacesuits that we're used to seeing. So it's the first suit mobility test that they're wearing that will test hand body control, vertical movement, etc. And again, this is very interesting that this is being tested out in space. So you see they've got a helmet and it just looks like a bodysuit, some of the traditional things that you see in a spacesuit on the elbows and stuff, but the whole body is much lighter, much more maneuverable. And they're just testing things out. And here they were at an altitude of 435 miles. The capsule was completely depressurized, and they're just relying on their slim spacesuits here for oxygen. So here's the crew. But again, it's just very different looking things. So here you have the helmet, but the spacesuit much more maneuverable, much easier to handle. And so maybe I grew up space being a really cool thing and idea. I think it's neat that we're getting out there and exploring it, but I think our government hasn't done too much in space. We've kind of let other countries take the forefront. So in one way, I'm encouraged by it, but again, there's always concerns about, having private companies do the space exploration. But I think it's neat that they're doing it. Another thing here, not sure how neat this is. Everybody's watched Terminators, so AI, which is already making a huge impact in many different areas, now they're coming out with reasoning abilities. So they're modeling AI after human thought processes. So this is Microsoft coming up with this new Strawberry series of A models. And so they're able to solve more challenging problems than previous doing science, coding, and math. And the way they're doing this is trying to mimic human thought. So they had the previous model only scored a 13% on this qualifying math exam for the International Math Olympiad. The new model scored 83%. It's a huge improvement. And again, exceeded human PhD level accuracy on most of these benchmarks for science problems. So they're using chain of thought reasonings to take complex problems, break them into smaller problems, and then resolve each one. They're training these models to spend more time thinking through problems before they respond, much like a person would. And they're also learning to refine their thinking process, try different strategies, and recognize their mistakes. So, concerned or not about AI, I mean, we have, there's no question that this technology is going full steam ahead, and some have even questioned if it's it's too late. The cat's already out of the bag on a lot of this. So it's going to be interesting to see how this affects the job market, how it affects businesses and individuals throughout our economy. So I think it's interesting to see how this develops, but we'll see how it goes from there. So inflation, I mentioned this yesterday, another article on inflation picked up again in August, and the PPI price index shows more, higher inflation. That's the CPI was a little bit lower, but it was the PPI that actually did increase more. So again, inflation rising at a faster rate in August than they did in the prior month, with services prices rising swiftly while goods remain flat. And so that's how inflation works in a market, that it moves from really one sector of the economy to another. And so it's hard to tell what part of the economy is going to experience faster inflation. It is something that has hit people throughout the economy, and it's not done. So compared with a year ago, the PPI was up 1.7%. And June was up 2.7%. But month over month, the PPI climbed 0.3% in August. And then core PPI was up 2.4%. So that's really where they're coming from. They slice it every single way to look at it. This last month, it did jump 0.3%, which added to the overall number. Services climbed 0.4%, while goods prices were generally unchanged, and they jumped 0.6% in July. So be aware when you go out and expect prices to be higher. I would negotiate as best you can, but it's just one of those things that's it's going to be out there. I haven't talked about this too much. The charges being dismissed in the Trump's Georgia case. I love that picture. Love them or hate them. It's just funny that they have that picture up. So some of the charges were dismissed by a different judge, Judge Scott McAfee, and they're appealing a lot of these to try to get this dismissed. The District Attorney Fannie Willis is in a lot of hot water. The next step, and there were plenty of other charges that weren't dismissed. But before that, they're going to look at the conflict of interest and if the DA should have been kicked from the case for conflict of interest, given all the facts that came out. So this will not be decided until, the next hearing won't even be until December. Court cases like this drag out, so we won't hear anything until well after the election, and at that point in time, it might be moot. So Trump came out, the huge, I don't know if it's huge, but with the new promise. He was in Tucson, Arizona, my neck of the woods. I was tempted to go, but I didn't because, I just had to work. My other attorney was out, so I was covering the office. But to end taxation on overtime pay. So this is a promise: your overtime hours will be tax-free. So he's in a promised taxation of Social Security benefits, but now, and tips as well, but now he's going for overtime hours. Now, this is something that's very interesting. A lot of people accuse Trump, and it's a fair accusation, that it mainly helps the wealthy. As a percentage of the income, yes, it helps the wealthy more than anything else, but because they pay the most in taxes. Here, this is not going to help anybody that's salaried, that's professional, that again, they get paid a flat rate. This is going to be mainly for blue collar workers, people working overtime and getting paid overtime. So this is not for salaried individuals. So I'm not sure how this would work. If it would maybe cutting the taxes for Social Security and Medicare that's paid on overtime. But some of the people that are affected the most by this would be police officers, nurses, factory workers, construction workers, truck drivers, machine operators. So really the people that are the backbone of production in our country. So would be a big deal for union workers. So again, not your whole hours, but overtime hours worked be tax free. So again, to incentivize people to work overtime hours, but also be able to take more of those dollars home. And so again, they're usually paid 1.5 to 2 times their normal wage, depending on the employer. And it can be very profitable for people to work overtime. It's estimated this could add between 100 billion to 200 billion to the nation's deficit over a 10-year window. Again, 10 to 20 billion a year drop on the bucket. But the problem is both candidates, Harris and Trump, have all kinds of, it's like they're competing with each other. Who's going to cut taxes the most? Who's going to give the most credits? We know we're in an election year because we're getting all kinds of promises. I don't know how this is going to actually help increase productivity. I had people that are already working overtime. I mean, that they're going to be working those extra hours. So I don't know if it's more of a reward and a tax break directly towards your blue collar middle class workers. So is that a good thing? Encourages productivity, encourages people to go out and work hard. But again, there's no, I don't know. Again, this just came out. I'm not sure how I feel about it quite yet. In general, I'm for cutting taxes, but at the same time, it has to be done reasonably. And the biggest issue out there, we're going to get to in a couple articles. You know what? Let's just get to it now. From CNBC, interest payments on the national debt top 1 trillion as deficit swells. In the short term, someone can say, I'm going to cut taxes all day long. Great, wonderful. It might help. It might actually increase revenues by a little bit. It's definitely argued that the tax cuts increased revenues. Revenues went up most years since we've had the Trump tax cuts in place. But it's not going to mean a whole lot unless we do something about our national debt. So again, this isn't new news, but we've been approaching there, and this is the first year we've actually hit that. We're not done with the fiscal year yet. This is the crazy part. So interest payments on the national debts are over 1 trillion as the deficit has swelled to over 35 trillion. So we owe 35 trillion, and now we're having to pay 1 trillion a year just on the interest. This doesn't pay the debt down. It's just on the interest on the debt. So if that's mind-boggling, it's just like the numbers are too big to figure out. If you're making $35,000 a month, which is not much, that's just under $3,000 a month. So if you were making $35,000 a year, and you're paying $1,000 every month, every year on that. That's pretty high percentage rate. It really does crowd out so much in spending. It's the only, so it's 1.049 trillion. The only thing that's more than this is Social Security and Medicare. Those are the only things that are, here we go. Social Security and Medicare are the only two items that we're spending more on than the debt. Now, servicing the debt, just paying the interest on the debt. Our deficit for the year is going to be just under $2 trillion. So that 35 trillion, we're adding a couple more trillion to it moving forward. And unless we make some serious changes to our spending, it's a time bomb. So unless we tackle it now and we seriously cut the spending of the U.S. government, we cannot spend $2 trillion more than what we bring in every single year. We're bringing in around $7 trillion. I think it's right 6.9, and our revenues are right around $5 trillion. That's not sustainable long term. It just isn't. And people that are saying there's too many people. I'm well into a break here, so I'm going to go ahead and pause and come back. Welcome back, everybody. Sorry, I did go over quite a bit with this article. It gets me going. How big the national debt is and how ridiculous our overspending is. So we have a month left still in the fiscal year, 1 month left, and it looks like we're going to be just shy of 1.9 trillion debt, or 24% increase from last year. The only bright spot is that the Fed is anticipated to lower rates, but that's for the wrong reasons. It's because our economy is weak. The labor market is slow, unemployment is down, and inflation is still higher than we want to get it. And that's based on the official numbers. The real numbers of inflation are much higher, but again, the government has just skewed those numbers so bad. So whatever tax cuts Trump or Harris is proposing, they're just a drop in the bucket compared to the massive overspending that we're involved in and doing every single year. So unless someone really tackles the national debt, really gets our financial house in order, in the end, whatever temporary tax cuts are going to go away, as we have to increase taxes in a massive way under austerity measures that we've seen in other countries, because there's no one to bail out the United States government. There's no one. And we are hurting ourselves, we're hurting our economy by overspending and throwing money to the wind. So again, Trump has talked a good game about cutting government spending, but again, I'll believe it when I see it. I don't trust either one of them as far as I can throw them, and neither should you. So we need to hold our politicians accountable to actually take seriously the biggest issues facing us. So, interesting article here. And one of the big promises from Joe Biden was we won't go after people making $400,000, that the IRS won't audit people making $400,000, less than $400,000. And this is a CNBC article. There's plenty of red flags that could still cause audits for people under $400,000. But the real kicker, as you get into the information, the IRS is still working on plans to avoid increasing audits on taxpayers making less than $400,000. They don't even know how to do it yet. There's nothing in place. They're working on it. How many years later? But this is a big promise that was put out by the Biden administration, and they have no way to measure this. They have no way to determine who's making more or less than $400,000. So they've made and I'm going to go and jump to this next article real quick. This is the actual inspector report. The IRS put out 27 pages, basically, and this is from Tigta. So Tigta is kind of a watchdog over the IRS. The IRS has made limited progress developing the methodology to comply with the directive not to increase the audit rate for people making less than $400,000. Limited progress means they're not there. They've made very limited progress. Here's kind of a summary. And this is an audit. They did an audit of whether or not they're actually complying with this, or is this just hot air being blown at the American people? Sorry, I'm a little biased here. And so you can read through it. It's 27 pages. If you can't sleep at night, you can read through it. But CNBC does a decent summary here. So Tigta is the organization's government watchdog calling them out, and this is based on the 80 billion for IRS funding. They didn't get all of that, but again, one of the promises that's been put out there time and time again is that it would not go after people making 400,000 annually. Yeah, the politicians said that. IRS has no way to do that. And so they haven't been distinguishing between wealthier and poorer taxpayers. So if you buy that line, I've got a bridge to sell you. It goes from Alaska to Russia. Get a great deal, I promise. Sorry, I'm a sarcastic person at heart. So Tigta's made some recommendations. The IRS agreed to some of them. And while they're trying to focus enforcement efforts on higher earners, larger corporations, and complex partnerships, they have been targeted. And so Janet Yellen, Treasury Secretary, is supposed to be in charge of all this. How many years later, they still have no way to track or see if they're going after people under 400,000. And I mean, it really is something that's hurting a lot of people. The IRS is going after people more than ever. And it's not just business owners. I've seen them audit average Americans. And so it's if you're concerned about an audit, you should be. The percentage of people that actually do get audited, it's I don't know if it's this or the next article. It's still pretty small, 0.44%. So maybe half of 1% of average Americans get audited, but it's 0.76% of businesses. And there's ways to drastically increase those odds. Not that you want to, but that's what I'm going to focus on today is how to avoid an audit, how to avoid the pitfalls. So common saying and with taxes and and law generally, pigs get greedy or pigs get fed. So normal pigs get fed. You can go to the trough and eat. Hogs get slaughtered. So if you become a hog and you get too greedy, that's where you actually, it's easier to spot you. You're sticking out from the crowd. And again, a lot of this is random. The IRS can go after you, and they've actually really stepped up their audit procedures in that you have to, if they do audit, be prepared, not only answer the questions they have, but you have to have the documents to defend every line item. So I'm going to go through some of these in this article, and then we have a much larger article that we're going to really focus on as far as making sure or try to avoid these issues so you don't get audited. So missing income. If you don't report a W-2 or 1099s, it's very easy for the IRS to flag that. Their computer systems, any income that's reported to them, they automatically flag that. It gets reported. More and more income is getting reported to the IRS. And so don't assume, assume your income is being reported to the IRS, and you should report it. One thing I do with my kids is I referee for club soccer. So I've been doing it for years. And yes, I reported it, but I didn't focus on it too closely. I didn't write off the fees, etc. that I have to pay, the equipment that I have to purchase. It's not a lot, but again, I'm not making a lot refereeing for soccer. It's a fun pastime. I get to get out there and get some exercise and make a little money while helping out local youth. So I enjoy doing it. Now this year, last year they started, and now they're even getting better, where everything is going through one server for multiple different leagues, and all of the income is being reported to the IRS. So assume it's being reported. If you have income, report it, and again, that's what we're supposed to do anyway. So being clear and upfront about your taxes is always, honesty is the best policy. I don't hide stuff from the IRS. I don't never encourage people to hide stuff from the IRS. If you get audited or you get investigated, it can be much nastier than you would think. Crypto investors. all crypto is being reported. Not, I can't say all crypto. All reputable crypto is being reported to the IRS. So I had someone that actually had crypto investments, and he asked me, well, what if I go invest on the dark web? I mean, there's plenty of ways to invest through the dark web where it's outside the U.S. government. I'm saying, well, sure, I'm sure you can find ways to invest and get around the U.S. government. One, it's illegal. Two, the same person had invested in a couple cryptocurrencies that turned out to be scams. So they had a website, they looked legitimate, he gave them money, they took the money, and when he wanted to pull the money out, they said, oh, you have to give us more money to pay taxes, etc. And that's a typical scam. He said, hold the phone. And he came to me, we checked it out, reported to the FBI. It was a scam. So he'd already invested in some scams posing to be crypto investors. If they're outside government agencies, if they're skirting the law, it's probably, well, I'm telling you, it's illegal. And it's very possibly a scam. So, if you put money there at your own risk, you're asking for trouble. This is a big thing. This is one thing that I mentioned. You need to be able to support every line item. So the IRS is even doing audits, and this has been around forever, but they've increased the frequency that they're doing this, where they go through and they don't care about your reasonings explaining. They're not just going to go for the red flags and try to focus in on a few issues. They will audit every single line item and force you to prove up every line item. So if you are not keeping good records, now is the time to start. So this isn't talking about those kinds of audits where they sit there and they don't care. They'll scrutinize they go line by line, and you have to prove it all up. If you don't, whatever you can't prove up, they'll disallow. But one of the big things is unreasonable deductions. So if you're making $75,000 a year and claiming $15,000 to $20,000 in charitable deductions, that's a huge red flag. When you're claiming a tax break, you need detailed paperwork to support every line item. So a credit, they go after credits and deductions used to offset income. And if you don't have proof, it could be disallowed. So whenever you're doing this, use a bookkeeper. You can use QuickBooks. Take your receipts. They should be scanned in, and it really helps if you're using a bank account. But having the receipts where it's clear on each one what each expense is will save you so much money and headache in the case of an audit. So again, here's where it talks about the frequency of audits: 0.44 for individuals, 0.74 for corporates. And we're going to jump to another article that dives even deeper into this. This is where we're going to spend the vast majority of our time, is talking about how to avoid an audit. So these are 19 different red flags, and I don't know if we'll get through all of them today. If you own a business, if you're self-employed, the rate of audit goes up, almost doubles. But at the same time, being prepared for it can save you so much time and effort. And if you have these red flags, it will invite an audit much quicker. So failing to report all taxable income, we talked about that. Anytime you get a 1099 or W-2, it is reported to the IRS. A mismatch between your tax return and what they have on file makes it very easy for the IRS computers to just issue a notice of deficiency saying, hey, you have unreported income, here's an additional amount you owe us. So then you have to contest it. If you don't have your information, if you think there's 1099s or other information that you don't have, I would highly recommend getting your transcripts before you file your tax return, which means you're going to be on extension. If you're on a business, just make sure your numbers are up to date, but especially for your personal returns, if you have 1099s out there, after May, you should be able to pull your transcripts, see exactly what the IRS has on you, and then use those to make sure you're not missing anything. Now, can a 1099 come in later? Yes, it can. And then you have to deal with it when it comes, but try to catch that and report everything that you're getting. So, and you're required to report all income sources. There's plenty of small things that they don't catch, like walking dogs, tutoring, driving for Uber or Lyft, you do get a 1099. But piano lessons, there's all kinds of small things that is hard to track. It's still taxable though. The more you make, more likely you are to get audited. That's just a fact of life. Not filing your tax returns. So if you don't file it, and there's people that get away with not filing for 5, 10 years. It all depends on what's reported to the IRS if they think you had any income. But if you just get picked for an audit and you haven't filed, they'll go in and file for you in the worst way possible. And tax returns only stick around for, tax debt only sticks around for 10 years, but it's 10 years from when the tax returns are filed. So if the IRS files for you 3 to 4 years later, the 10 years doesn't start for another 3 to 4 years. They have that much more time. And it's worse with states. So if you don't file with the state, there's plenty of states where the time limit, which is usually 20 years, doesn't start to run until you file an original return. So you can have tax debt sitting there with the state for decades, and the time's not running on it. So they can pretty much follow you until you die. It's pretty crazy, but that's why it's very important. You know, every state is different, but most states, it goes for at least 20 years from when you filed your original return and it got processed. So again, if you haven't filed, get straight with the IRS. You don't have to file all of your returns. You just have to get the last 6 years for the IRS. It might be further back with states. But again, this gets back to pigs get fed, hogs get slaughtered. So and this that was repeated straight from an IRS representative in investigations. That's how they track people. It's easy, if you stick out and you're taking higher than average deductions, losses on credits, or credits, you invite more scrutiny. So again, make sure if you do any of that you have the proper documentation, expect to be audited, and you won't get disappointed. So if they don't audit, great. But have your ducks in the row. If someone comes and looks at it, make sure you have your paperwork together. So some of the things here, if you have a big loss from the sale of rental property or other investments, can raise red flags and trigger an audit. So if you write off for bad debt deductions or worthless stock. Again, this is mentioned before, taking large charitable deductions. It's going to raise red flags. You're going to get audited more frequently if you have a business. Why? It's a lot more complicated than running a W-2. If you're getting paid a W-2 or a straight 1099, you don't have a bunch of business deductions. This is where the IRS can. There's a lot more abuse here, and this is where the IRS digs into this a lot more to see what's going on. It's a gold mine for IRS agents that too many self-employed people claim excessive deductions and don't report all their income. So the IRS is looking at higher grossing sole proprietorships and smaller ones. So it's, again, this $400,000 number. If you think they're not going to come after you, if you're making less than $400,000 with all this extra money that they have for collections, forget about it. That's again, with that other, what just came out directly from Tigta from the IRS, they're just developing or starting to develop how to even track that, because they have no process in place to actually track that, which is just mind-boggling. That again, that's a promise that's been repeated time after time, and it's still. I read that this morning. I said, well, that's what I've been suspecting. That's what people have been saying, but here the IRS is actually confirming it. So we're about to hit another break, and we're going to continue through this, just hammering through ways to avoid audits, and we'll be back shortly. Welcome back, everybody. I'm just continuing with this article on, and there's a lot of different things in here. We're going to try to go through the rest of it fairly quickly. So again, there's no difference here between higher gross ones, smaller ones. Some of the things that you want to watch out for: cash-intensive businesses, taxis, car washes, bars, hair salons, restaurants have a higher audit risk because there's a higher temptation to not report all the cash. Again, if you have substantial losses on your Schedule C, and you can have loss carry forwards. I've seen plenty of people with losses in past years that are carrying that forward, go through audits, and have the IRS put them through the ringer to prove that what they're claiming on their tax return is true. Claiming 100% business use of a vehicle is a prime audit red flag. So the IRS knows that it's rare for someone to use a vehicle 100% of the time for business. So they target heavy SUVs and large trucks used for businesses, especially those bought late in the year for a tax write-off. They have more favorable depreciation, and so again, it's more favorable to taxpayers. So again, they're going to look at that. You have to keep detailed mileage logs and precise calendar entries if you're going to claim mileage. If you don't keep good record keeping, it's just an invitation for a revenue agent, and those are the people that conduct the audits to disallow your deduction. Hobbies. Yeah. What is the difference between a business and a hobby? It can be confusing. So essentially, in the IRS eyes, if you're running something for profit, it's not a hobby. And if it's not a hobby, that's a good thing. So, for example, if someone goes out and flies model airplanes, and they're actually pretty big, it's a pretty cool hobby. But if you get a sponsorship and you have some money coming in, but essentially it's all written off by the expenses, you're spending more money than you're making. It's a hobby. You're doing it for fun. You're not doing it for profit. And the thing about hobbies, most people, when they go and they do something for fun, scuba diving or whatever, it's something they enjoy doing. What you're spending on a hobby, you don't get to write off all the expenses for it. So if someone's rebuilding cars and it's something they like to do in their spare time, if you make some kind of profit on it, that's fine. But it's where you're showing a loss year after year. So again, year after year, large losses, or you haven't reported. I had one person that had losses for 8 years and they got audited. So again, if you're never making money out of an activity, they can go in and disallow all the expenses on this activity. So I had someone that had a farm and they had to work because the farm wasn't self-supporting yet. So they had some animals on the farm and it just wasn't profitable yet. It was going to be quite a few years before it became profitable. So when you're in collections, they're not going to allow a loss in one economic activity to offset income in another. That might work for your tax returns, but again, that's a red flag for the IRS to go after. But again, they can sit there and say, okay, we're going to classify this activity as a hobby, and if they do that, then you don't get any deductions for it. If you don't get any deductions for it, it takes something that might have been losing a little bit of money, and now you're losing a lot of money on it. So if it's something you enjoy doing, and you're doing it just for fun, and you're not really making profit, and if you're not in business to make profit, then the IRS assumes it's a hobby. So there's some safe harbors as well. If you're concerned about that, talk to a CPA, give us a call. We'll talk to you and kind of go through it and see how the IRS is going to treat it. But again, these are the biggest things. If you're reporting income, the IRS is going to be fine with it. If you're not reporting regular income, that's where it gets to be a problem. So failing to report professional earnings as self-employment income. So the IRS wants their taxes. They want their Social Security taxes on everything. So be very aware of how you're reporting self-employment income. So rental losses. Rental losses are a big thing. It's really been a big issue lately, where if you have, there are passive loss rules, and it's been harder to actually take those losses through real estate. So if you're actively participating, again, there's rules to do this. You can deduct up to $25,000 of loss against your other income. Again, if you do this for a few years, fine, but you don't want to do this year after year, and if you have huge losses, it can be a problem. It phases out as your AGI exceeds 100,000, and once your AGI hits 150,000, it goes away completely. It's different if you're a real estate professional and you're spending 50% of the working hours participating in real estate, developers, brokers, landlords, or the like. So if it's your main business, but if you're doing it a side business, you need to be very aware of the limitation on losses. So again, the IRS is actively scrutinizing large rental real estate losses. So if you're claiming to be a real estate pro, but you're really not, be careful here. Don't assume that if you're dabbling in real estate on the side and you're not doing it as your main business activity, so more than 50% of your working hours participating in real estate, it could get disallowed. Claiming tax credits. Like we mentioned, so claiming too much in deductions, claiming too much in losses, tax credits. This is a big one. So college is expensive, and when they come up with all of these tax credits, and we have the same thing coming out with the ERC. So there's plenty of credits that the IRS gave out. They put all this, made this money available, and now they're going back and scrutinizing all these claims. So if you're not sure if you qualify, check with an expert, either CPA or tax preparer. And if you're not sure or you don't feel comfortable with the opinion you get a second opinion. So it's up to $2,500 per student for each of the first 4 years of college. It's based on 100% of the first 2,000 and then 25% of the next 2,000. So you have to spend $4,000 to get the 2,500 credit, and 40% of the credit is refundable, meaning if you can get it even if you don't owe any tax. So again, it phases out if you have AGIs over or begins to phase out at 160,000, 80,000 for single filers. So it's to encourage people with less money to be able to support their students or their children in college. So watch out for this. Again, certain things qualify: tuition, books, fees, but not room and board. So the AOTC, another credit, same credit. One of the big issues here is that people claiming it for more than 4 years for the same student. So if you don't have the school taxpayer ID number, just make sure when you're claiming these credits, make sure it's done correctly. The health premium tax credit. This is a big one. I could spend a whole session just on this. This is the ACA, the Affordable Care Act. So it's over 10 years now, but it still burns people all the time. Why does it burn people? Because you have to estimate what your income is at the beginning of the year, and you get health subsidies if you're part of that, through healthcare.gov. If you're on one of the marketplaces, they're all state marketplaces that are out there and being offered. So if you put in your income and your income goes up, this is what catches people. Anytime your income goes up, you need to report that to the IRS so that they can then increase your subsidy. I mean, why would people want to do that? because then the IRS looks at your tax return at the end of the year, and if you had more income than what you guessed at the beginning of the year, so life happens. If you got a better job, if you got a promotion, if you start working a second job to pay for the increased cost of inflation, all of that will increase your income and affect your subsidy for health insurance. So when they quote you, it's going to cost you so much a month, be very aware that's a much larger cost that's being assumed by taxpayers, and that's the total cost. So you're only paying a small portion of that. And if you end up having much higher income, you'll be responsible for a much higher amount for the total premium for your health care. So someone's paying it. It's not free. And again, you have to be very aware that this is a tax that hits so many people. Again, if you don't report it correctly, it can cause an audit. It's an audit red flag. IRS computers are just automatically flagging this. And we do see plenty of people that owe ACA penalties. It's not mandatory anymore, but if you're on healthcare.gov and you're getting that money, make sure, one, you qualify, two, that you update any income. And unfortunately, it's not easy. It's not easy to go in and get them to make those adjustments. This is a very common one. Taking an early payout from an IRA or 401k account. You need to report that. If you're taking out payments before 59 and a half, there can be very nasty penalties. So there's a 10% penalty on top of the regular income tax. So if you take it out and your tax rate is 20%, you get smacked with another 10% penalty on top of that. You have to make sure that when you take that money out, that you have the taxes withheld from that as well. They do have charts. If you have a good CPA, again, they can help you make sure that you take care of that correctly. But it also boosts your income for that year. So if you're, it often puts people in a higher tax bracket. So if you have a special need, or someone, first of all, there are ways to take money out if you have a health emergency. You pay a mortgage, something like that. So look into that first before just taking that money out. Talk to a financial advisor, planner, go talk to your HR department, seeing what you can do. Alimony is another big thing, and we're running out of time, so I'm probably going to just run through this. If it's a pre-2019 divorce, you can deduct alimony. Post-2019, no. You can't deduct alimony or child support anymore. So again, that was a big change with TCJA. Big one right here, failing to report gambling winnings or claiming big gambling losses. Make sure you track your gambling. Make sure you're dealing with the same group of companies that all have one card or reporting things. I see people on tax issues all the time due to gambling winnings or losses. So you have to keep track of it. If you have more questions, give us a call. Again, claiming other exclusions that you might not qualify for the foreign earned income exclusion. I'm just going to kind of run through some of these. Marijuana business. Love it, hate it. It's our system is very, very messed up when it comes up to marijuana. It's legal in many ways, and for a lot of the legal dispensaries, they're legal on a state level. They're still illegal federally. I do think the federal government needs to figure this out. If you're going to allow people to run a business, you should allow them to operate like a business. But right now, banks won't deal with them. It's just they're in limbo. Again, it's a high cash business, so it leads to, that makes them targets for crime. So federal statute bars tax deductions for sellers of controlled substances. Marijuana is still a controlled substance and illegal under federal law. So they can't write off legitimate business deductions. I don't think that's right, but the courts have consistently sided with the IRS on this. So you're not going to win on this issue until Congress figures it out and makes some common sense fixes. I'm going to kind of run through the last ones here. taking the research and development credit, R&D, big red flag here. Make sure you're doing it properly. Virtual currency or digital asset transactions for your business. So be very aware of this. And then this is a huge one. Failing to report a foreign bank account. It hasn't been in the news, but we are out of time, so we will see you next week. Have a great day.